This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Welcome back, everybody, to The Wealth Puzzle. It is Owen. I will be putting on a video for you guys today. No Mike, no Tana. I apologize for that. We've been quite busy. It's been a while since we've even made a video, so we figured this is probably a good time. We've got a lot of really cool stuff happening this week, a lot of economic indicators to talk about, as well as that big SpaceX IPO. And a lot of you guys have been asking questions about it, and so we figured, hey, let's talk about it a little bit today and then try and tackle a couple of the other things that we see that are important as of right now. So where do we start? Well, I think a nice place to begin would be talking about the future, not SpaceX, but economic indicators. So over the next week, we've got a couple of cool ones happening. And when I say cool, I mean influential. The core CPI is the big one that we'll pay attention to. This is the one that sort of guides the Fed's decision on whether they cut or make rate hikes or don't do anything at all, right? Just sit and wait. So that'll be a really interesting one that we'll have to pay attention to. The last reading back in April was 3.8. Obviously, you're seeing this right here. This breaking news headline, as the time of I'm recording this, is saying, hey, inflation might top 4%. And so obviously we'll have to see how we'll have to see how Kevin Warsh decides to move with respect to that of inflation, right? Is it going to be sticky? Is it going to be cooling? A lot of analysts, and the expectation is that it's not going down. It might stay the same, or it actually might show a bit of an increase. Obviously a higher than expected increase in inflation will cause fears that they need to actually hike rates sooner than later. And we'll talk about what the Fed is, what the probabilities are saying in terms of that in just a moment here. But I also want to get to some of these other ones. You also want to pay attention to core PPI. So this is on the producer side. Core CPI is on the consumer side. So this is what the producers are paying, right? So when they go and export or import things, when they're buying materials in order to produce the very products that we purchase, this is the inflation that they're feeling. And then obviously when those things get to our table or into our pockets, this is the prices that we are feeling, the increase, the inflation on those prices. So we'll be paying heavy attention to those two economic indicators. Obviously, we want to pay attention to these initial job loss claims. Historically speaking, over the last year or couple of readings, this has actually been trending the opposite direction, right? If we scroll all the way down here to last week, we actually had some employment and job jolts readings, and those were actually good readings, meaning the labor market seems to be showing signs of strength, showing signs that it's not necessarily going anywhere. Let's go to this one right here. Employment rate, here we are, 4.3, unchanged, right? And then we also had an increase in job openings revised to 172,000, which is fantastic. The previous report back in April was also revised upward. And so we're starting to see a really strong trend that the actual labor market within the country is relatively strong and healthy, right? And so if you couple a strong labor market with increasing inflation, well, then that is a sign, or a tall tale sign for the Fed to then go and cut rates. Historically speaking, that's the case. That's what you read about in textbooks. That's how it goes. And so we'll see what those reports come out and tell us, and then obviously what the Fed decides to do. I want to jump over to this one. Let's go ahead and share this tab instead. So if we come back all the way to today, obviously the markets are already pricing in that there will be no change in the Fed rate. So no change now. We don't actually see any real change all the way out until December. And that's actually, they're showing a higher probability of a rate hike, 71% chance of a rate hike in December. So this data can change monthly, right? As we see a hot or a cold or bad or a good economic indicator or inflation report, so will these probabilities. As of right now, based off of where things are trending, well, it looks like the Fed will actually have the opportunity to increase rates. Now, for individuals that are dealing with treasury yields, mortgages, things like that, well, you don't want the rates to go up, but that's just the situation that we find ourselves in. There's always opportunity. And so we just have to be mindful of where things are trending. So just understand, if we do get a hot reading, a reading higher than that of what the initial expectations are on CPI right here, that for the most part, right, we shouldn't see a whole lot of movement, because again, the markets are pricing in that inflation is not cooling. It's basically staying relatively flat or slightly increasing year over year. So all that to say, this will be a really fun week to kind of see where the market stands, where the health of the country stands. Okay, now outside of this one, I'm going to remove this for a second. Outside of the economic indicators, I also wanted to talk about this one. Let's go to here real fast. This is a cool chart. So this is actually going to tell us where inflation really resides year over year. You can go look this up yourself. It's on the U.S. Bureau of Labor Statistics. It's all public information. What I like about this chart here is it tells us, hey, okay, we're obviously experiencing some level of increased inflation. So where, historically speaking, is that inflation being inflated by? Now, all the items you're seeing, historically speaking, 3.8% increase year over year, 3.2 on food, and then all items less food or energy. Well, you're seeing about a 2.8% increase year over year in terms of inflation. Now, the big one, right? Energy prices. Year over year, those prices have increased by 17%. Now, I don't think this is a mystery to anybody at all. A lot of that is largely correlated to the fact that there's a big conflict going on in Iran. The Strait of Hormuz is being squeezed. And so that of oil prices have now increased. Obviously, you've experienced this. If you filled up a tank at all here in Texas, we're starting to see prices of gas similar to that of California, which is crazy, right? $3-4 a gallon of gas out in California is, I got to apologize, right? It's all relative. You guys are experiencing a much larger increase in your own gas prices. So why do I bring this up? Well, just to kind of give you guys some context, I think when we get energy prices to come back down, and they will, it's just a matter of time. This is an element of the broader market that's being elevated, not naturally, right? It's artificially being inflated. That's what I was looking for. And so when the Iranian conflict comes to an end, then we should see oil prices also drop. Now, it's going to take time, but as that does, well, that element or that segment of the market will cease to be as aggressive. And then energy is going to trickle into every other thing, right? Producing or agriculture or making any item that we use all requires oil, all requires energy. And so you can start to see the trickle down effects of lowering energy prices across the board. That's your context for inflation. That's how you kind of digest an increasing inflationary number. Well, just understand a lot of it is largely correlated to the fact that this stuff is all being propped up by a war in Iran. So there is an end in sight. There always is. Again, there's opportunity everywhere. You just have to understand how to position yourself. You also have to be aware of these things. So that is that. That's all I wanted to share there. Let's drop this one off. The next thing I want to talk about has to do with the market, right? We're getting to the SpaceX stuff. I promise we're almost there. But we also had a couple of calls. Let's talk about this one right here. Let me pull this one up. Share screen. Apologize here. So this one's unique. On Friday, we had a sell-off, and we'll talk about that. But honestly, the week and the last couple of weeks leading up to it, the market has performed really, really well. I mean, we had, 9 straight weeks of green, essentially, which was fantastic. And so obviously the accounts are doing really great. Portfolios are doing really great. All those things are awesome. But if you attention to the news cycle and you listen to any CNBC or MSNBC business talk show host, anyone, you probably heard the word froth, right? Well, let's talk about what that means. Why were they saying all these weird words? Well, this is the S&P. This is a year-to-date. It looks like, yeah, we're looking at year-to-date. And so since April, market's gone pretty much up, right? There's been a couple pullbacks here and there, but relatively speaking, nothing significant. On Friday, that's what you're seeing here, we had a pretty decent sell-off. So leading up to Friday, everyone talked about the big froth word. I was going to say F word, but I would have scared some people off. Froth, right? Meaning there was companies in the market as a whole, well, they were trading way above that of their fundamentals. They're trading in excess of what they're really should be valued at. And so all of this was, right, this moment in June on Friday was an opportunity for the market to basically take some of their profits, right? You bought in a stock down here, and then you got out here. That's all profit. And so really on Friday, all that happened was, you know, the markets tried to say, okay, look, we're overvalued in terms of where we think the market's going. So let's sell off, let's take some profit, let's rebalance. And so you'll see the market came down to about the 20-day moving average and sort of bounced. It's sort of sitting there. Now the question is where is the market going to go from there? Obviously, traders are starting to play the game of, do we think that the market's going to continue to fall and do so until it reaches the 50-day moving average, or so on and so forth, to each and every other one of these moving averages? Or do we think that it's going to bounce here and then do a little bit of volatility and kind of trade off headlines? That's the conversation. Historically speaking, you can kind of see that the markets tend to try to trade and follow these trend lines. It's not as an exact science, but it's a decent gauge to kind of get an idea of where the markets are going. So understand that Friday was a sell-off in terms of profit taking. It was trying to pull away from the fact that we're probably a bit overvalued. And when I say we're, I mean the individual stock companies themselves that sit within the market, right? The values in terms of buying and selling in the open market, well, they were a little skewed towards the upside. And so everything has to come back to equilibrium. And that is all that is happening here this last week. So today we're actually up. I think year to date, the market is up around almost 9%, right? I think 8.4 was the last reading I saw. So really fantastic. It's a great place to be. Okay, we've made it, right? Let's talk about the SpaceX IPO. We fielded a ton of calls. A lot of people are really excited about it. A lot of people are really skeptical. I even talked to a couple of clients about the fact that they're probably already investing in it if they're broadly based investing into indexes, right? These big mutual fund or index funds. And that's sort of the case. It's and a half answer. A lot of these index funds are buying into SpaceX IPO itself. And so you're going to be forced into owning it if you're, basically investing your money very broadly. But for those individuals that are trying to get more exposure or more focused exposure and buying the IPO itself, well, we've had to have a little bit of a come back to earth moment. That was a sort of a pun on the idea of SpaceX there. Bad joke, I recognize it, but they can't all be home runs. SpaceX is an incredibly overvalued company as of right now, especially when you look at the fact that the company is bringing in no profit. It's operating at a loss year over year. And they're no longer really focusing, and when I say focus, the marketing of it all, they're no longer marketing as an IPO about going to Mars. The IPO is really focused around AI and infrastructure, right? They're bringing in Starlink and all these other Grok AI things to kind of prop up the health of SpaceX, the IPO itself. And so, yeah, you get the partnership with Anthropic, you get the partnership with Microsoft or Google or whoever it was, and you start to make you start to build a better case as to, hey, this could be really successful. Now, I don't think SpaceX is going to be a bad company. It'll probably be a household name in the next 5, 3, 10 years, but it doesn't mean that we have to go invest in it in day one. Statistically speaking, right? If we go, I'm going to see if I can share this one here. Statistically speaking, if we go look at IPOs over, history, 60% of the time they go poorly, right? For the first 6 months after an IPO, the stock itself actually trades lower than an initial price. Let's go this one. I'm going to share my screen. Let's look at this one, I believe. So this was an interesting article talking about the SpaceX IPO. Obviously, these companies, brokerage firms, are trying to do a lot to get more retail investors invested or have the opportunity to invest. But I kind of wanted to bring up this point right here. So this article is talking about exactly what I just said. All of these companies at their IPO, well, they fell, right? So Meta, a huge household name, very successful. They fell 47% in the first 6 months of its IPO. Alibaba dropped 26% in its first 6 months. Coinbase lost 75% of its total value within a first year of its public debut. Rivian, a company that's not doing too great right now, fell 80% from its peak. Now, SpaceX is not Rivian, it's not Meta, it's not Coinbase, it's not Alibaba, but it does paint a picture. Right? There's a time and a place. And I don't think that investing in SpaceX at its IPO is the time or place to get in. Now, if you're a very speculative investor, you want all the risk and you want to ignore me completely, do it. Right? That's your mantra. That's your thing. This is not investment advice. This is just trying to give you guys context. What is SpaceX? Should we be involved? Should I be involved? What is the bottom line, right? What does it matter? So I would just be cautious. I think investing initially in a company that is not making any money and then also trying to transition not away from launching a rocket to Mars and putting life on Mars and transition and make the focus more about AI should be a bit of a red flag, right? If you go in and read their, we can do it actually. Let's do it. Here we go. Share this tab instead. So this is their S1 filing. You can go read this. It's all public. This is sort of where they try to hype you up, make you feel good about buying into their IPO. You can go in and look at their financials. And this is where you get to see where everything is happening. I mean, billions of dollars in losses. They're not financially a great company right now. And so with that being said, I just think they're trading off of a lot of headlines. They're trading off of a lot of excitement, right? The idea of inhabiting an entire different planet is quite unique. In fact, in this S1, it'd be really hard for me to find it, but in this filing, they actually talk about why their valuation of about $2 trillion is an adequate valuation, because that's that $2 trillion valuation is basically over 100 times that of their EBITDA. So earnings before interest, dividends, or earnings before interest, taxes, and depreciation, amortization. That's an incredibly high valuation. Now, they said, to our point, hey, look, we're going to help inhabit an entire planet, right? Our valuation comes from the fact that we are going to drive an entirely separate world of GDP. It's serious. They talk about it in their S1. So a unique company, a unique story, but I just don't think that it makes a whole lot of sense in the short run. I think over the long run, it could be a very interesting place to, put your money and have exposure to, but let things play out. Let everything kind of come to you. Let's see let's see what happens on June 12th, the actual date of the IPO. Obviously, there's going to be a lot of volatility. There's going to be a lot of craziness going on that day. But I think there's better places to put your money. I think there's safer places to put your money right now. With that being said, we talked about a lot of fun stuff today. Hopefully you got a good idea of what's coming down the pike. A lot of really cool economic indicators, a lot of really good data coming our way. So we'll have to see how that all shakes out. Obviously, we'll have to see what the Fed does. Markets are pricing in rates not changing, and then even possibly increasing at the end of the year. And then, a big SpaceX IPO. So hopefully it all goes well, and I'm sure it will. But we'll just have to see at the end of the day. All right, you guys, have a wonderful, fantastic rest of your week. Bye.